Why in the world was the Fed cutting rates at record highs and just before this other 1,500 point explosion on the Dow, another rate cut, another quarter of a point? What's going on behind the scenes? I mean, they say, oh, the economy is great, and they're cutting rates. Why?
Well, the economy is not great behind the scenes, and the Fed's own beige book demonstrates that. And they started, people forget, Jerome Powell actually said in one of his month, I think every month or two, he comes on and gives a Fed policy statement. He actually questioned the veracity of the payroll numbers even then. I think it was this summer, and then sure enough, we had a revision down. The Fed has economists and real economic data. What they're seeing and what they're saying are two different things. So the Fed beige book is showing weakness. The economic statistics are showing weakness. The labor market is not, but that's been fraudulent, and they even figured that out themselves. The reason they cut is because they see the economy weakening, and they don't want people to know that, but that's why they're cutting. And I think inflation year over year rate of change is dropping, so they feel like they're getting I know the average person doesn't care about rate of change, but that's what they care about, and the rate of change is coming down. And if you look at commodity prices, they peaked in 22. Commodity prices are not going to new highs. Even with this stock market rally, commodity prices are telling you what's going on. The U.S. dollar in the short term is going back up because of Trump getting in there and implementing tariffs. Everyone's going to weaken their own currency, so the dollar's catching a bid. Yields are going the wrong way, but mark my words, once the truth comes to light, yields will start going down again. The Fed sees something that they're not happy about, but they don't want to alarm people. That's my humble opinion, and we'll see soon enough financial reality come to light.
I've always thought that if they cut rates, we'll have big inflation. How much can they cut rates and not have more inflation? But you're saying that the counterpart to that is the foreign governments are going to weaken their currency. So here, a big basket of crap, and the dollar is going to be the nicest piece of crap floating on top, I guess.
That's correct. So the dollar, if you look at the long-term dollar chart, it put in a very important low in the Great Financial Crisis. And there's a 4-year cycle to the dollar. I use Tim Wood's cycle work. On average, 4 years. It can come early, it can be extended. But if you look at every 4-year cycle low on the dollar, it's higher than the last 4-year cycle low. So the dollar's been in a stealth bull market since the Great Financial Crisis. What's happening now is the dollar, we were expecting the dollar to bottom sometime at the end of this year or beginning of next. It may have put in a sneaky 4-year cycle low last year. And if that's the case, the dollar is going to strengthen considerably. We won't know for sure for another 3 or 4 months. But if the dollar doesn't start to go down, this is going to be a problem for global credit, the global economy, and our trade partners. And if you look at the global stock markets, they did not react as well to our election as we did. The DAX broke a 3-year trend. The Chinese stocks are rolling over. There's problems globally. And we're the last man standing in terms of stock markets.
Real estate. The 10-year Treasury, when they cut the first time, was around 3.6 something, somewhere in that neighborhood, 3.5, 3.6, I think. Now it's 4.3. The 30-year mortgage is over 7, actually over 7 pretty well. And you weren't keen on the commercial or the residential real estate market for now or before. And what are you now? Do you think it's even worse now?
Well, no one can afford home prices compared to income are at extremes. I think it's 7.5, and for this real estate market to really catch a bid, it needs to get at least to 5. I'd like to see it go to 3 temporarily, so a lot of people who are on the sidelines can buy. But we're not there yet. And what we're seeing in the residential real estate market is a pause. There's no transactions right now. It's the lowest. Some statistic came out. We haven't seen this number of transactions since the COVID 20. I think it's worse than the COVID 2020 lows. So this doesn't bode well going forward. The real estate is a big driver of economic activity and household formation and all the things you need to buy. So there's a pause until one of two things happens. There's a correction in price, or interest rates go down a lot lower. It's one of the two.
And you think interest rates are going to, at this point, they're going to go down from here?
Well, the Fed is you got to remember that it was an inversion of the yield curve, one of the longest inversions of the yield curve we've ever seen, which augurs for a recession. What's interesting about it is when the yield curve re-steepens, that's when the recession is about to begin, and we just got a big, huge re-steepening. So the Fed is lowering rates, and we have had a re-steepening of the curve. Then as the financial crisis becomes more apparent, they'll lower more on the short end, and the long bond will start to go down. So the yield curve will remain steep as we go into the recession, which obviously is 18 months out predicting a recovery. So that's what's going to happen. We're going to see the 10-year and the 30-year come down eventually. They haven't. There was a 3-year cycle low in bonds last year. We haven't come anywhere close to those lows yet. So I think traditional asset reallocation is going to occur, and people are going to be clamoring for